Peter, with you, let's talk a little bit about markets. Oil continuing to weaken, tumble. Tumble was the headline in one of those bulletins. There's one result of a question we put earlier, which is, talking about the sort of risk premium really in the market and how that's been weakening really in the last month rather than strengthening. So, why is that? Just too much oil?
Oh, I think there's another side to it as well. And good afternoon, greetings from Sydney. I think probably the Israel-Palestine war premium seems to have dissipated a little bit. That's come out of the market. It's very evident now at $77.08 for NYMEX, and you've got Brent running at 81.50. So they've been all the hot air's come out of it, Dyala, and it's been a time probably over the last couple of days to be short. This week's been a very, big week last week. S&P up 6% or just under. We understood what Powell's thoughts were as far as the Fed, and US dollars come off a little bit of pressure, and certainly everyone's sold energy and sold it down hard. And those export numbers, as far as what China thought that we may see a little bit of a bounce there, they were shocking. So I suppose that's the storyline that we've seen in the last couple of days.
Okay, thanks. Peter, let's just talk about, again, the oil price. It has dropped obviously in the last month, ironically, a bit, still, and so looking even more cheap. I mean, everyone's saying even at 90, oil is cheap because of inflation and because of historical values that Richard just mentioned. But versus other commodities, for example, how are other commodities doing, relatively speaking, in terms of inflation impact?
Well, if you put your mind across to the likes of gold, and there's a lot of ways that's decoupled, I think, against the US dollar, has been very evident. You had that very strong move to the upside, and gold's actually touched 2000 or 2010. I think it's about 1975 at the moment. So there's one instance. I think precious has been. You couldn't say that 20 years ago. Richard's example, you can't say the same about gold. You can't say the same, probably you could, about some of the grains, but there are some commodities that have shot very, very well to the upside and others that have languished. The likes of base metals have performed very, very well, and think of iron ore, think of copper, probably tin, aluminium and nickel and zinc. And some of those, dependent upon, the crop, some have performed incredibly well over that 20-year window or that period of time. The likes some, sugar, probably coffee, but others have, performed. They've been lackluster, and that's I suppose, the great attraction of these markets, Dyala. You've got to find one from a trading perspective. I look at it from the lens that we look at it. We've got over 10 million clients, and they want movement. They just want it to be up or down. So I suppose it's a little bit unfair, but as Richard said again, we haven't been disappointed in movement over the last 20 years.
And how much is the China story sort of pushing those metals that you mentioned, which are doing relatively well? I mean, is that support is coming from China? Is it coming from the US?
I think it's a global demand. I mean, you've only got to go to, I was in, like, my travels in the last month. I went to Mumbai, Singapore, cranes central. I mean, the cranes and the construction in India is just mind-blowing. UAE, I saw plenty of cranes and plenty of construction. So, it's just the need for raw materials hasn't gone away. The need naturally for electricity and how you're going to power these particular projects. And then you're looking at, the overhang, and this is where we're sitting now with 91 or 90 million uninhabited apartments and building and homes in China. What happens to that overhang? Are we going to see that get absorbed by the market, or is it going to be a great washout? And is Jim Chanos going to be right? He's been talking about it for enough years now to say that the Chinese property market's going to be the one that's going to capitulate everything. So the old story, someone's debt is another person's equity, and who's holding the debt? Domestic banks in China and 120 global banks. And you understand as well as anyone the contagion of that, because people sell the book, or they, use all these different exotic derivatives to manage risk.
Yeah, it's certainly a bit of a scary risk there. Peter, what do you think in terms of US dollar? It has weakened a bit, obviously relatively speaking, in the last week or two. What will support it more? What the Fed does, or demand, in other economies, weaker demand and weaker currencies?
Well, I think just the divergence between the Fed rate and ECB and the yen and BOJ, and probably to some extent to the Bank of England, is probably enough to keep the rate where it is, and the potential for possibly even further rate rises. That 150,000 that we saw in October for the NFP that dropped last Friday, that was another reason why you saw I think some of the good news entered stock markets. They realised that that's what they want to see, is a weakening or softness, and not as many jobs, and that whole discussion point. Are we going to see the Fed move again? Yeah, I won't be surprised to see possibly I don't think they'll do anything in December, but certainly maybe Q1. Australia lifted rates 25 basis points yesterday. That was our 13th raise. I think matter of fact, I won't be surprised to see probably March, maybe the possibility of another rate rise. We've just got to see how retail sales go over Christmas, how unemployment is, how inflation is, and the value of the dollar. But the dollar where it is at 105.50, it's given up a little bit of hot steam, and it's very, very choppy, but it's a lot stronger than when it was at 101. So I think I won't be surprised to see it probably go up again from here. The markets are volatile, and I think that's what we're going to continue to see from now till the end of the year. Dyala, is just big volatility swings.
Peter, I'll just jump to you on the Bank of Japan thing. In terms of slight change of tone there over the last week or two, but again, I mean, is that having any impact on markets beyond Japan?
Well, I mean, there was the talk of a change in their yield curve control mechanism. Yeah. The BOJ has been quite vocal in the importance of, just made some notes of earnings growth and all of those sort of stances, and trying to be accommodative. But the reality of the matter is you've had a Nikkei that's boomed to the upside. It's been absolutely on fire for the last year and a half or 2 years, 32,000, nearly 33,000. And you've got a yen that the BOJ is not worried about, and it's 149, 150, 151, oscillates between there, and don't seem to be too worried about things. So I suppose with a cheap yen, it's probably a contributing factor to their whole philosophy at the moment, and they're just playing their cards close to their chest.
Thank you so much, gentlemen, for joining us this morning.
Thanks, Dyala.
Good to see you, and have a great remainder of the week.